Good morning. It is Tuesday, April the 21st. Here's what's on the agenda. Markets regain their footing on AI and Iran talks round two. Will the real Kevin Warsh please stand up? And Tim Cook hands over the reins at Apple.
European markets then, stock markets yesterday, Tom, down a bit, up a bit today is the expectation. Are we happy? Are we in a range? Are we waiting for more news out of Iran? Or are we happy to move higher on the tech themes? That's certainly something that the Asia session likes to run with. But Euro Stoxx 50 futures up by 0.5%. Brent crude also waiting for news out of Iran, moves of 1% to the downside. We're told the Iranians are going to be there. We just don't know exactly who. And the pound, a little bit of movement in the pound this morning, but not much. 135.21. We're waiting for news on the jobs front. Will any of that cut through the inflation, Bank of England and politics, of which there is plenty in the UK? The countdown to the opening trade starts right now.
Good morning. As far as I can tell, the narrative looks something like this. There are talks taking place in Islamabad. The equity market firmly believes that we are going to see de-escalation as a result of those talks, as a result of which we can focus on other things, i.e. the AI trade. The earnings story looks pretty good so far. And oh yes, we've got a nice little kicker coming through from lower volatility, which allows the hedge funds basically to re-lever. So all of that's kind of the nice story. But is there something coming after that? And is the market beginning to worry about this, i.e. the fact that we get stagflation further down the road? If the market is worried about this, there's no sign of it. Yes, certainly in the equity markets, because this quarter we're going to focus on tech and earnings. Next quarter, maybe we'll worry about the stagflation story. The bond market's a whole different story, and we'll come on and talk about that throughout the show. But for now, equity markets are quite happy. Yeah,
it seems interesting that a lot of the people we talk to, even if they are saying, no, the market's not complacent, the market is right to move on and focus on these other things, even a lot of those people don't think that there's nothing to worry about in terms of stagflation and an economic downturn. They just think it's not here and now and it will be countered by AI to some degree. To what extent, we'll have to wait and see.
Citi putting out a report in terms of how the oil tightness that we're seeing could feed into that inflation longer term. With the build-out of inventories, they're saying even if a deal is done this week, it's going to take about 2 years to build back the inventories that have been lost as a result of the closure of the Strait of Hormuz, which kind of builds on that picture, which is what is the time frame for when this really feeds into, particularly on the earnings front, the focus on margins. And we're going to be speaking to Mandelson follow-up because she's been thinking about this as well at JP Morgan about how to price this longer term in terms of the inflation impact and the concern there, even as they remain pretty constructive on the near-term upside for equity.
It's interesting. Are there things that could come out of the talks? If the talks take place, which it looks as if they will, the Iranians reportedly will be there. If they do, are there details that will matter to the markets in terms of how long any deal is going to last for, or will the markets just be extremely happy to move on?
You know the answer to that question.
Certainly in the short term. They don't seem to want to dwell on the detail.
Yeah, you don't want to dwell on the detail. You don't want to focus on the longer term because at the moment things look okay. So let's not rock the boat. But clearly there is going to be a problem further down the road. The bond market's really interesting as well. What does the bond market do with this? Stagflation is the worst outcome for the bond market, right? But the bond market at the moment kind of can't decide if that's the kind of the central case or whether or not you get a de-escalation which allows oil prices to come down, which takes inflation off the table, or whether or not you get a growth shock which takes rate hikes off the table and delivers rate cuts. So there's kind of multiple scenarios there as well. So the bond market almost feels like a rabbit hole caught in the headlights as well. The equity market seems kind of more nimble and sort of, we'll just take the good news for now. The bond market looks...
Because there's more risk premium priced in the front end of the bond market.
Yeah.
Isn't there? I mean, they're above the base rate for these central banks, but above 3.75% on the 2-year for the Fed. So there's a suggestion that there's a bit more risk premium at the front end of the bond market and maybe a bit more complacency in the equity markets. But there's two deadlines that President Trump is looking at as well, which is China and the meeting in China, and that's in May, and wanting to clear the decks on Iran before he gets there. And then longer term, of course, the midterms. So two of those factors you can assume are playing into the thinking of the president who wants to get this deal.
A bit more pressure applied by China to the Iran situation over the last 24 hours, which is interesting.
So if you're the next Fed chair, what do you do with this?
Well, what do you do with this? And will this matter to markets? I know that John Author's putting out a piece saying that nothing that Kevin Warsh says today in his Senate testimony is going to really matter to markets. But I mean, you know, let's dwell on it for a moment because it might. There are things that he could say that might. I mean, the reason he says that, of course, is because Tom Tillis is still standing in the way of him actually getting confirmed. But let's see. I mean, we've heard from him already. He's put out some details in a note that Bloomberg has seen about what he is going to be saying. And a lot of it comes down to it sounds like a pretty kind of traditional Wall Street Republican view of stay in your lane. You know, the Fed does monetary policy. The Fed should do monetary policy. It shouldn't do social policy. It shouldn't do fiscal policy. It should just do what the Fed, the FOMC is designed to do. So there'll be a lot of that kind of messaging. But it might be more interesting how he responds to the questioning, which will be a lot about Fed independence, of course, but also, as you said yesterday, around the balance sheet. And also, Elizabeth Warren has been trying to ask him through written questions, has he promised President Trump anything? So all of that about his relationship, the way he sees the relationship with President Trump when he's in office, could be interesting. At least, something to get the popcorn.
What happens when he doesn't cut rates? How does Trump respond?
For how long does Trump hold back? And Scott Bessent,
Not long, I would assume.
Bessent has recently said, you can have a bit of time, and then the president came out the next day and said, no, we still need lower rates. So yes, Fed independence. He's been pretty consistent on the question of the balance sheet. He hasn't been consistent on the question of inflation and how the Fed should respond to that, and changed more dovish in 2025. So how does he answer that question? And then there's a question about the structure of the Fed and Fed presidents, and whether or not, for example, investigations into people like Lisa Cook are something that he would support, the firing of Fed presidents. So those kind of changes as well. So there was a lot that he's going to have to dance around to try and find that balance.
And I know you're going on to talk about tech, and actually he's got some interesting views on AI and the inflation dynamics around AI, and he's been emphasising recently the deflationary narrative around technology. So we'll see if that comes out.
Maybe that is the cover for Kevin Warsh as he points out to the future AI productivity gains. That's going to lower inflation, and that allows you to push rates lower. Major news.
Let's talk about Cook.
In terms of Tim Cook. So he's going to be stepping down September the 1st. Mark Gurman of Bloomberg had reported that this was likely to happen, and had also reported as well prior to today that John Ternus was going to be taking over, and that's exactly what has been confirmed from September the 1st. Just looking back at Tim Cook's reign as CEO, the stock is up about 2,600% since Tim Cook took over 15 years ago. The market cap's gone from about $300 billion US to a little over $4 trillion US dollars. So in terms of investors in Apple stock, Tim Cook has performed for you. There have been some missteps along the way, of course, but otherwise this is a robust business that he's handed over, with questions particularly when it comes to AI and how they respond to that.
Isn't he a hardware guy?
John Ternus is a hardware guy, yeah.
Don't we have a software problem, i.e. an AI problem at Apple?
We do, and they're leaning heavily on Gemini, they're leaning heavily on Google to resolve part of that. But is that a long-term strategy? Is that something that they're going to be comfortable with?
Why have they picked a hardware guy?
Because hardware, agentic AI, embedded devices, embedded AI in devices, robotics, all of that is still going to be central to Apple and their competitive edge. And they have this touch point across billions of consumers worldwide, and it's hardware that has made that possible for them.
It is interesting, isn't it? Because one of the missteps that you talk about was around the car and the autonomous driving. So, that was I guess it was software and hardware, but it was a very big bit of hardware that didn't really work out. I was looking at some of the ideas that they've got that they're working on at the moment. New smart glasses, new AirPods, all sounds pretty standard. A pendant with a camera, frankly, sounds a bit spooky. And what I read is a tabletop robot, but it's not a sort of, just little robot doing acrobatics, which I thought it might be. But it's actually more of a screen.
That's your dream still, isn't it?
It's still my dream.
No, Anna's dream is a robot that chases pigs or balls or whatever they were.
Oh.
Wasn't it? That's what you got excited about the other day?
Yes, sort of, yes.
Yes.
Long story.
Thilan Nugent is Commerzbank's commodity and FX research head. She'll be with us shortly. Madison Fowler, JP Morgan Private Bank global investment strategist, here as well. Rob McCare, former UK ambassador to Iran. He's going to be with us in the second hour of the show to talk geopolitics. Yeah, he's got really interesting views on maybe divisions within the leadership in Iran, and what that could mean for talks as well. Let's get ahead and look ahead to what else we are watching throughout this Tuesday, 9 a.m. UK time. Then Olly Robbins, the testimony, of course, from the former senior Foreign Office official, who, of course, the UK Prime Minister has accused of not telling him about a particular vetting procedure for former UK ambassador to the US, Peter Mandelson. So that testimony is going to be very significant for the fortunes of the UK Prime Minister. We'll bring that to you, of course, and be across that. 10 a.m. UK time, the German ZEW survey. So a touch there, an update in terms of the health of the German economy. 1:30 p.m. UK time, we're going to get US retail sales on the consumer. And 3 p.m. UK time, it is Kevin Warsh, Fed Chair, hearing, of course, hoped
for Fed Chair, from Kevin's position at least. That hearing will be covered for you on Bloomberg TV, of course, with all the analysis. And at 5 p.m. UK time on the earnings front within the semiconductor hardware space, ASM International earnings.
Let's get to, well, we should linger on the UK maybe a moment, because just in a couple of hours we're going to be hearing then from Olly Robbins. So that's the politics, and politics is clearly centre stage. But we do have some other data out right now. December to February wages, excluding bonuses, rising 3.6% year on year. The estimate was 3.5%. But this goes to February. I don't know if anything before March really scratches the surface. It doesn't seem to be moving the pound. Might not move gilts. Gilts much more interested in the future leadership of the Labour Party and the Bank of England inflation narrative at the moment.
Which of those two things do you think is the dominant driver at the moment?
Until May the 7th?
Well, precisely. Well, maybe earlier. Who knows what's going to come out of today's hearing with Olly Robbins. The Prime Minister clearly has a number of significant risks that he faces right now, but this is the most clear and present one. But you do wonder, with those elections, those local elections coming up, whether he survives until then. I don't know. How is the bond market going to react when he goes? How is the gilt market going to deal with a potentially more left Labour Party leader being in number 10? I don't know. Who's the next chancellor? There's so many questions around the gilt market right now. Yeah. But the data's not telling us very much.
Do those who want change, do they really want Andy Burnham? If they do, it's a long game. They've got to wait a long time for that to happen. So that's a totally different sort of time horizon. That takes us in the run-up to the next election.
And even as the Prime Minister stays, will he have to make concessions to the left of the party, which will mean more spending anyway? So in any scenario, there is a reading that you're going to get more spending and more pressure on the bond markets. How much is priced in at this point remains a question.
Again, how does the gilt market react to this? At the moment, the gilt market's sitting on its hands, kind of watching all of this, isn't ready to move quite yet. OK, Tuesday morning, what else do you need to know? Amazon shares rising after the bell in the US following news that it will invest an additional $5 billion in Anthropic and may inject $20 billion more over time. Anthropic, which of course is the maker of the Claude chatbot, also plans to spend more than $100 billion over the next 10 years on Amazon Cloud services and AI chips. Amazon is one of Anthropic's biggest backers, with prior investments totaling $8 billion. Ukraine expects oil to resume flowing through the Druzhba pipeline as soon as today, clearing the way for the European Union to unblock a much-needed €90 billion loan for Kyiv. The pipeline supplies Hungary and Slovakia with Russian oil, or did so before it was damaged in an attack in January. EU leaders approved the loan in December, but Hungary later blocked the disbursement of the funds, with outgoing Prime Minister Viktor Orban conditioning the aid on the resumption of oil flows. And finally, the German Chancellor says his government rejects, quote, hostile and aggressive tactics in the German banking industry. Friedrich Merz was speaking to German banking executives after Commerzbank formally rejected UniCredit's takeover bid. Merz made clear that his reference was to, quote, recent events, without explicitly naming Commerzbank. UniCredit's CEO, Andrea Orcel, had earlier issued a stinging criticism of the German lender's strategy, and he will be speaking to Francine Lacbar later this morning. You can catch that interview at 9 a.m. UK time.
Coming up on the programme, global airlines are feeling the pressure as jet fuel prices reach new heights. We will discuss how carriers are planning to manage the energy crunch. Plus, Kevin Warsh heads to the Senate with his confirmation for Fed Chair in limbo. We will discuss the potential roadblocks ahead for Warsh and what to expect from his testimony. Up next, we'll be joined by Salman Ahmed, Global Head of Macro and Strategic Asset Allocation at Fidelity International. How should you be positioned in these markets as we head into these talks in Islamabad? IB plus BBTV Go is the function to use on the Bloomberg terminal if you want to get involved in these conversations. This is Bloomberg. Welcome back to the opening trade. Now, President Trump has told Bloomberg he's unlikely to extend a 2-week ceasefire with Iran, which he says is due to expire on Wednesday evening, Washington time. Meanwhile, Bloomberg understands that Tehran is preparing to send a delegation to Islamabad for talks after earlier casting doubt on its participation. For more, we're joined by Bloomberg's Jumana Basechi in Dubai. Jumana, take us into the prospects then of what we should expect from these talks. What would it mean for a ceasefire? We do expect the Iranians to go, which is progress on this time yesterday.
Yeah, well, preparations is most definitely underway in Islamabad, though we're getting close to noon, lunchtime over here in the region. So I think at this point, it's fair to assume that if the discussions do happen, they're probably going to happen tomorrow. Also of note, J.D. Vance, the vice president who is leading the U.S. delegation, hasn't left the U.S. yet. So you've got to assume that if there is going to be another round, it will probably happen tomorrow at some point. Now, yesterday, President Trump did speak to our colleague Jeff Mason, our White House correspondent, and did tell him that he is going to extend the ceasefire deadline by 1 day. So that takes us to Wednesday evening, which also suggests that there's a crucial 24 hours of a potential for a diplomatic breakthrough coming up. Now, to your point, we still don't know who exactly from the Iranian side is going to be participating, if indeed they will be participating at all. There have been numerous posts, various comments coming through from officials and Iranian leading negotiators, including the Speaker of the Parliament, Mohammad Ghalibaf himself, who said Trump seeks to turn negotiating table into surrender. We do not accept negotiations under the shadow of threats and have prepared new cards for the battlefield. This is echoed also by Iran's ambassador to Pakistan, saying that they will not negotiate under threat. And basically what they're saying here is as long as the U.S. naval blockade persists, they will be less incentivized to participate in this next round of discussions. So right now we're in a bit of a standoff where ultimately the president has to make a decision about whether he wants to maybe perhaps temporarily lift the U.S. naval blockade that's in place in order to facilitate this next round, or, and the alternative is you allow the ceasefire to pass, and both sides are saying that they are ready once again to militarily intensify operations. So again, I've said this many times, but we are heading into a crucial 24 hours, and whether these Islamabad talks actually go ahead will be critical for where we go from here.
Absolutely. Jumana, thanks for the update. Always appreciate it. Jumana Basetchi joining us out of Dubai. Salman Ahmed, Global Head of Macro and Strategic Asset Allocation at Fidelity International, joining us around the table. The equity market thinks that we are going to get de-escalation. Is that the right trade? Is it right to focus on AI and tech and all the other things that are going on in equity markets right now? Earnings are looking pretty good. We've got a re-leveraging of hedge funds. Is that the right signal to take from what we are hearing Jumana talk about?
So I think equity market is right to focus that right now we are in this posturing phase. There's a lot of noise. We have been in this camp of messy resolution. But you can argue that there's, and for justified reasons, that there's a lot of focus on the earnings. And those earning numbers which are coming out include March, which was that 1 month of hostilities. So I think that is giving that confidence in equities. But at the same time, bond markets have locked in some permanent increase in yields. So there is this, and oil is significantly up.
Is the bond market right to do that? Because there's also an argument that's floating around that's basically saying bond markets are wrong right now, and that what you're going to see is either de-escalation and the oil price comes down and the inflation premium comes out of the bond market, or you get a growth shock, which basically forces central banks not to hike, but actually to cut aggressively.
So I think we are in the camp that, the short end may have gone overreacted to this shock, especially if a de-escalation starts to take hold. But I think the main issue here from a medium-term perspective is the long end, because every government in the world is going to have to spend it on defense. Right. You are going to have hoarding in oil. These are choke points which have been activated, especially for Asia in this case. And China template was that you hoard, you can pass through this shock. So I think and that also means that oil may have to, in addition to logistics issues, may carry a more permanent premium. So our expectation is $80, $85 average oil. So bond market, I think long end is the one which we'll be focusing on as the fiscal pressures again rebuild, especially on defense, energy resilience, more domestic capex. So these are the more longer term permanent themes which are probably going to come out of this shock.
So that $85 view on oil, when does that start to factor into the earnings story? It's not the quarter we're looking at now, clearly, because the markets are looking at upgrades to earnings. When does that become an issue, and where do you see margin vulnerability?
So I think this current quarter is because the oil has been up for more than 6-7 weeks now, and we do expect that even if an announcement of a deal comes in, and also I think Devil is going to be detailing the deal as well, how clean it is, how sustainable it is. I think a lot of other questions, but So I think as we go through this Q2, we should see this start to feed. The jet fuel prices, all the products have been elevated for some time. We don't expect them to go to pre-war levels. And the vulnerability areas are the consumers of energy. And geographically, that means that the low-income countries in Asia are going to suffer a semi-permanent shock. US is immunized. They have a lot of oil. Their exporters, probably WTI, will start to, come back to pre-war levels, but not Brent and not the grades which were passing through the Strait. So I think this is a dislocation at its core. Doesn't mean it's a systemic issue, but certainly there are going to be winners and losers. And I think low-income countries in Asia, and then specifically the sectors which are consuming these products, we think are going to see margin pressure.
So how do you think about allocating around that dynamic?
So basically, we are waiting for two things. As this de-escalation comes in, I'll start with FX. We expect that FX depreciation, the dollar depreciation will restart. As the diversification flow starts to come in, gold will probably start to do well again. Then if you go to bond markets, as I mentioned, long end, steepening of the curves, governments are going to be spending money, and then when you come to equities, we are going to start reallocating away from US back into some of the beaten up areas in EM. LATAM looks great, energy resilience plays, and real rates in some of these countries. So I think this dislocation for us starts to create opportunities, but again, this de-escalation has to happen. All this goes out of the window if we have a breakout of war.
Yeah, let me ask you about that de-escalation then, Salman, because I appreciate that in the first instant, the response in markets might be quite binary, deal or no deal, up or down, risk off, risk on, whatever. But what is it about the detail then that will matter? What is it that keeps oil prices, energy prices relatively elevated?
So I think in terms of the deal, there are two things we are talking about. If you cut the noise, the Strait, that's the jugular vein. Who controls the Strait, at what terms, and the risk that the Strait can be weaponized again. Right, so I think there was, if you remember in the last Islamabad 1.0 talks, there were some leaks that US and Iran were talking about a joint venture on the tolling. So that story didn't take hold afterwards. But I think what is the status of the Strait? Can Iran do the tolling? Please remember that 80% of the traffic from the Strait goes to Asia. Most of that goes to China. Europe obviously is second on the order, usually on the gas side. So it's a very geographical, geopolitical game which is happening. And I think the status of the Strait is going to be the most critical one.
Okay, so we watched the status of the Strait. On your EM Asia calls, Salman, there is a view that actually this becomes a fiscal story in Asia because governments act to protect the people from higher prices, more so perhaps than in developed markets. Is that something that worries you with your EM call? So
some of the lower income EMs, for sure. Right now, I think some of these countries are having molecule shortage. So even if they give fiscal, they're not going to get the molecule. Like countries like Pakistan have used their army and navies to get the tankers. I mean, India did some deals, but the smaller countries have not been able to do that. So the second story is if oil remains elevated, how these countries will fare. And that's why we like LATAM, the commodity plays. We underweight India. We still think that India it will suffer from the AI issue. And also elevated oil prices. So there are some specific, differentiation plays which potentially will start to become more cleaner if the de-escalation comes through.
Okay, Salman Ahmed, thank you very much.
Thank you.
Indeed. With that view on the markets in light of the geopolitics as we continue to expect and monitor, of course, developments on the ground in Islamabad, coming to us from Fidelity, of course. So there is and remains the key focal point, Salman point. We can think about the uranium deal. We can think about all sorts of different parts of this conversation between the US and Iran. But it's really all about the Strait and what comes out on the back of these conversations if we assume there is going to be a deal.
Equity markets focusing on the AO trade. Bond markets sort of focused on inflation, growth, stagflation. Oil markets still kind of focusing on the idea that actually we've got a problem here.
We will tell you, we will, in fact, continue these conversations. We'll talk FX and commodities with Tulan Nguyen. That conversation from Commerzbank coming up shortly. This is Big Bang.
Tuesday the 21st, 30 minutes to go until the start of equity trading here in Europe. European equities were down, let's call it circa 1% yesterday. Today we're up a little bit, but not as much as we lost yesterday. But nevertheless, the positive narrative in equities still seems to firmly be there. We're keeping a close eye on Islamabad. But also earnings today. It's a huge day for earnings in the United States. Names like GE, Boeing, all these kinds of names are going to be reporting earnings later. So that earnings narrative will be there as well.
Yeah, absolutely. So the earnings narrative rubbing up against the pre-existing tensions around Iran, although increasingly moving through that, it seems, from a market's perspective. From the bond markets then, which have been preoccupied by the inflation dynamic coming out of the Middle East, this is the picture right now. We see at the margin some buying of European bonds and those yields going down a little. We will watch with interest what happens to gilt markets. They had plenty of time to respond, of course, yesterday to what Keir Starmer was saying in Parliament. We ended the day with up 7 basis points on the 10-year gilt yield. We'll see if there's another day in that story as we wait to hear from former senior civil servants at the Foreign Office.
Meanwhile, today oil and gas lower in today's session, slipping this morning on signs that Iran will attend negotiations with the US in Islamabad before the ceasefire between the two sides comes to an end. Tulan Nguyen, head of FX and commodities research at Commerzbank, joins us now. Tulan, thanks for your time. Happy Tuesday. If we do get a deal in Islamabad, whatever the nature and makeup of that deal, what is the likely snapback in oil prices if a deal is come to on this second round of talks?
Well, I think we've got a taste of such a reaction at the end of last week, right, when the Iranian leadership announced that the Strait of Hormuz was open, and so we immediately dropped back below $90 per barrel in Brent oil. So I think something similar would happen if we were to hear an agreement tonight. However, I think the last couple of days were also a lesson to the market in terms of how reliable any kind of announcement is. So it really depends if this announcement is a joint announcement, is it only coming from one side? So the details will certainly also matter.
We were speaking to Fidelity early on the show. They got a view of $85 a barrel on Brent on the assumption that there is some kind of deal or lasting ceasefire. What is your understanding of the ability to get physical crude back onto the markets if the Strait of Hormuz is reopened, and what the lag and time frame that we should be looking at is?
I think $80 per barrel in Brent oil actually until the end of the year is something that we are looking at. So that already shows you we're looking at a continued relatively tight supply, even if there were a solution to the conflict and the opening up of the Strait of Hormuz in the next couple of days. So I think it will be rather difficult, and it's not only about a normalization of the shipments through the Strait of Hormuz. It's also obviously about reparations of energy infrastructure in the region. I mean, you probably have heard IEA chief Fatih Birol has said that more than 80 energy assets have already been damaged in the region. So that will also take up time to be repaired. So against this background, I think it will take a couple of months until we will see a significant uptick in production and shipments from the Gulf region again.
Tulan, good morning. Can I ask you about Chinese oil stocks? To what extent are they still very well provided for in China? Because they had been doing a lot of work to stock up before this happened, of course. But we have heard the Chinese leadership being quite outspoken now, moving to a new phase, perhaps, in the language they're using about the war.
Yes, I think they're in a relatively comfortable position right now. And we've seen, we don't have official numbers, obviously, but we can deduct the amount of stocks from imports and obviously domestic production. And they're at quite a comfortable level. And they have driven stocks up quite significantly over the past year, which is obviously very beneficial at the moment. And at the same time, China is also restricting the export of oil products. So on that side, I think they're rather comfortable as well. So for them, obviously, there is a room to obviously wait this out to some extent. But at the same time, I think they are one of the main receivers of oil from the Gulf region. So that's also in their interest that this conflict will be resolved soon. Even though stocks are rather comfortable, they will not last forever. And so I think it's also in their interest to put some pressure on Iran to find a solution to this conflict.
And Tulan, what kind of messaging are you taking away from the extreme, the structure of energy prices right now, the backwardation, extreme backwardation that some are describing?
Well, time spreads have come down somewhat, obviously, and that goes hand in hand with the fact that the oil price, so the most traded oil price contract has come down, and markets are relatively relaxed. They are betting on some sort of resolution of this conflict. I mean, obviously, I think no one is naive enough that they will think that there will be a lasting solution to this conflict, but at least a simmering down, basically a return to the status quo that we saw before the outbreak of this war, where there were always talks taking place, and obviously sometimes they were talking, sometimes not. We saw some volatility in that even before the war, but obviously not to the extreme that we've just seen. And I think it's rather likely that the market is betting on a return to that kind of situation, and that shows also obviously in the curve. But even there, you can see that a price of around $80 per barrel is also priced in at the end of the year, which is significantly higher, obviously.
Are we going to see shortages in Europe?
That depends very much on how long the Strait of Hormuz will remain closed. And obviously, one of the most severe situations or critical situations we see obviously in the jet fuel market, particularly here in Europe, because 75% of our imports came from the Gulf region. And at the same time, we are already seeing that our stocks are declining significantly at the 6-year low. So if this goes on for a couple more weeks, then sure, you can see some shortages in jet fuel at least.
Okay. Looking forward to that. Tulan Nugent, Head of FX Commodities Research, joining us from Commerzbank. Tech investors are welcoming Apple's change at the top, it seems.
It's been time for change with AI and so much innovation in software that really Apple has fallen behind on, despite their hardware being so excellent. This is a great move for Apple.
Gerber Kawasaki's Ross Gerber speaking there. We're going to have more on Tim Cook's retirement as CEO at Apple and what to expect from the new boss, John Ternus. We'll talk about that next. This is Bloomberg.
Welcome back. This is the opening trade. Just under 20 minutes until the start of cash equities trading, and we are expecting a little bit of upside, but we do seem to be, Tom, in a bit of a holding pattern where we focus on tech because we're still waiting for news out of the Iran talks, which look as if they possibly will take place, but we got maybe another day of this.
Yes, probably, possibly. I like the framing around the conversations in Islamabad, expected to take place. But yes, there has, for the markets, been this big focus on AI. NASDAQ 100 has 13 straight days. It was snapped yesterday, but futures are pointing higher today. And you've seen strong momentum in the Korean session again. We're going to be keeping an eye then on European chip stocks as well. That's as easing geopolitical tensions, potentially, and a revival in the AI trade bolstered Asian equities. The Kospi hitting a record over in South Korea. Let's get more from Bloomberg senior strategist Neil Campling. Neil, how's the AI trade looking to you?
Renewed optimism. Again, I think part of it is because if you look at where earnings growth is globally, much of that is driven by the tech sector. Within the regional, you mentioned Kospi. Kospi is very heavily dominated by the memory companies out there, which again, it's all the AI, massive earnings upgrades coming through for this year. We've seen spot prices for memory going through the roof as well. We've seen Amazon's investment, again, talked about overnight in Anthropic. So there's huge appetite in the AI trade right now. we'll have to wait and see what comes out from the earnings season in terms of the growth rates from the hyperscalers. That'll be a key point, as will CapEx, obviously, for the time being. Huge numbers expected there. So there's a lot of optimism in the AI trade, and partly because, of course, it's kind of insulated from oil shocks and insulated from some of the other elements that we're seeing in other markets. But I've got a feeling that your colleague is about to say, is it too good to be true or similar?
Well, I'm going to laugh because traditionally chips have been cyclical, and it seems they've been priced not to be cyclical now. But hold that thought. I'm not sure we've got time to debate that whole thing.
We need to talk about this again tomorrow, so we can save that.
So there's plenty more time to changing of the guard at Apple. What does it mean?
It's been expected for some time, although the timing is slightly earlier than expected. Internally, apparently, he is known as Tim Jr., coming from an engineering and hardware background, so no real surprise there. Yeah, so it's a fairly seamless kind of transition. When Tim Cook came in at the helm himself, there was lots of challenges that Apple faced. One thing that is quite simple under Tim Cook's leadership, Apple's market cap has grown from $350 billion to $4 trillion, which is pretty impressive.
Not bad work.
There's lots of questions around, obviously, what is going to happen now. We have time to get into that debate, but there is a lot of issues, if you like, potentially facing the new CEO.
Yes, and we were asking at the top of the programme, if the problem has been AI and maybe being a little later than they'd have liked around the AI dynamics, then is that really a hardware solution to solve? And if it isn't, why is John Ternus, with his hardware background, why is he the right guy? But maybe you have answers as to what the challenges are.
I mean, the integration of the Apple platform has always been about hardware and software integrating seamlessly. That's always been Tim Cook's ethos, which comes from Steve Jobs' ethos. Where we are challenging now, clearly, is that we're going through a massive potential new hardware cycle for Apple, actually, with the foldable iPhones that are expected later this year. With regards to AI opportunities, well, we could ask Siri, but I'm not convinced we're going to get a great answer. That has been a challenge for them. They've not massively invested in AI themselves, but often Apple is a fast follower rather than a leader in technology, which it's quite easy to forget. Challenges are faced in terms of globalization or the risks about the reliance on the Chinese manufacturing footprint. These things have been ongoing for quite some time at Apple, but clearly they do face lots of challenges, whether it's in AI, whether it's in new products, whether it's in new growth drivers for the business. But at least we have a continuity in terms of leadership, I think.
Poor Siri. It's the whipping child, really, of the failures of Apple to embrace AI. It's called by my young children in our house Silly instead of Siri because of its failure to react. Tim Cook's not going anywhere, though, is he? What's next for Tim Cook?
Well, he'll move up into the chair role, so still clearly the oversight on the business, and so I think that probably not much change in terms of on the philosophy of the company, but in terms of the day-to-day management, that's where you'll see some changes. It sounds
like a full-time job, what he's going to move on to, because if you're dealing with the US government and the Chinese government and you're doing all of that's a big part of the role, and if it allows the hardware guy to focus on the hardware, then maybe that's a good idea.
He can focus on technology, and Tim Cook, who's already a brilliant diplomat, comes into the fore as the key diplomat really going forward, as you say, because those relations, especially these dynamics of tariffs, remember those last year? Yeah, they could come back in focus as well. So, I don't think Tim's going to be spending the billions just yet.
OK, Neil, thank you very much. Neil Campling joining us there to talk about technology. Let's turn now to today's markets in 3 minutes on the opening trade with Adam Linton from the Markets Live team. Adam, good to have you with us. I mean, should we rerun our conversation of yesterday about whether stocks are too complacent? I mean, they were down a bit yesterday. They're supposedly up a bit today, so maybe there's a different complexion to it. But what are you watching for? We just had a conversation about how some of the specifics, actually, of any deal out of Islamabad might matter to markets.
Yeah, I think that's a fair assessment. It's pretty remarkable. Basically, closed that opening gap from Sunday that we saw in the ES, and I think basically the market is still, as we've been saying, is looking through a lot of the US-Iran noise, providing there is a direction of travel for a deal. So obviously, we don't know necessarily if Iran will attend talks, and we don't know if the ceasefire necessarily will be extended. The market for now is looking, optimistic and hoping that we will get some sort of extension of a ceasefire, but that can only take you so far. If they keep rolling and rolling, this ceasefire and Hormuz remains closed, then that is obviously going to be a sticking point for the market. But it's not really looking to price that at the moment. Instead, what you've got filling the void is you've got this optimism, as Neil was just discussing. Then you've also got a relatively upbeat earnings outlook for Q1. You've seen Morgan Stanley, Goldman Sachs, JP Morgan all relatively positive. Yes, Q2 may be a slightly different story, maybe a bit more downbeat story, but for now the market just isn't really pricing that.
GE, RTX, 3M, Northrop, Halliburton, GM all reporting numbers today. I think Boeing's tomorrow. I spoke a little bit earlier. How much of this is to do with the fact that hedge funds are re-leveraging, that you've still got the CTAs still kind of pushing pretty hard, the Fed's pushing money into the system as well? Is there a kind of background liquidity story here which I'm missing?
Yeah, I think that definitely could be a factor to some extent. We've seen like a lot of the CTA activity. We saw it last week. We've seen it follow through into this week, and that's definitely giving some extra juice to things. But I think also it's a case of attention's market span. We've had all this US-Iran conflict, and we are kind of slowly moving back towards some of the things which have proved supportive in the past. Like I said, this AI optimism, which, if you're in Asia, you're seeing the Kospi hit record highs. You're seeing gains to the TAIEX. There's also, you don't really want to be missing out on that rally because you can have a bearish view, but it just isn't holding water at the moment.
How challenged is the UK right now? We had jobs data suggesting that there's been a further 11,000 cut to payrolls. Part of the energy story seems to be in the mix there for employers. We've got political risk on the horizon. How's the UK looking?
Yeah, so obviously, the caveats for today's UK jobs data, a lot of it was pre-conflict. And I think for the UK, obviously, that March data you said, that was relatively negative. I think we need to see the totality of this week's data. So we've got inflation on the data slate tomorrow. That gives a bit of an indication as to what the immediate energy pass-through was. I think the PMIs might actually be more interesting. So we saw last month, I think it was input inflation for manufacturers. That was the highest since Black Wednesday. So we need to kind of see how that plays out. But that may be something which takes a few months to become slightly more obvious in the data. I still think there's a reticence on the Bank of England to potentially hike rates, so you could see yields come down. And then if you are looking for a steepener candidate, the UK could be one, because as you mentioned, we do have a lot of this UK political uncertainty, which could be on display today, and we do have Olly Robbins delivering his testimony today.
Adam, thank you very much indeed. Yeah, we'll be across that, certainly the UK politics, with that testimony starting at around 9 a.m. UK time. Adam Linton from our Markets Live team. Remember, you can get up-to-date analysis and insight from Adam and the rest of the team. Just go to MLive Go on your terminal. Let's get your stocks to watch this Tuesday with Chloe Melly. Chloe.
Good morning, Tom. Things are getting increasingly tense between UniCredit and Commerzbank. UniCredit came out yesterday criticising Commerzbank's structural weaknesses and story of underperformance. And Commerzbank reacted quite strongly to that, with the CEO saying she was astonished that it took UniCredit more than 18 months to come up with a plan that lacked such a basic understanding of the business. We also had the German Chancellor Friedrich Merz criticising UniCredit's takeover efforts, saying that he rejected hostile and aggressive tactics. So we'll be watching out for any movement there for those two as those tensions grow between the two banks. Moving on to defence, where Thales is in focus today. The French defence company reported a big surge in orders for the first quarter, specifically in the defence segment, and sales also beat estimates kind of across the group. So we'll be watching out for any impact there. It said that the war in the Middle East had really reinforced the relevance of its solutions, its defence products, especially air surveillance and air defence systems. So we've seen the shares kind of zigzag a little bit over the last few months, but we'll see if today's trading update is really enough to sustain that about 4% rise year to date. And finally, AB Foods is going ahead with the separation of Primark from its food operations. This is a demerger process that is set to complete by the end of 2027 and will result in both entities being listed separately on the London Stock Exchange. And so we'll watch out for any market reaction there for the breakup of one of the UK's biggest conglomerates, especially when we've seen a lot of weakness, as we can see here, for the AB Foods share price.
Chloe, thank you. Chloe Melly with some of the stocks in focus. Let's add to the list with a couple of UK energy companies. In particular, I'm thinking of Centrica and SSE. We've had headlines out this morning that suggest the UK is going to apply a higher tax on older renewables, and that tax is going to go up to 55%. And this is an attempt to try and persuade those on a particular renewables tariff to move away from that onto something newer, which will try and reduce the role that gas prices have in people's domestic energy bills, basically, because at the moment, because of marginal pricing, even if you don't use that much gas, you still end up paying the gas price more than you perhaps should do. So that's part of what's happening here, and it has weighed on those companies in the past. That story.
Sounds complicated.
Yes, anything that involves contracts for difference. Precisely. It is complicated. What is not complicated? Well, what will be also complicated is people's trips home today.
I can see there's still a lot of cars out there, which is maybe going to change. We'll see what happens with the oil price. But for now, we have a tube strike in London. So public transport, bicycles. It's a nice day out there. So I would sort bicycles and walking to the fore. Yes.
You're embracing this.
Well, yes. Walking is going to be a bit of a struggle, but bicycling, I think, could be the way forward today if you can get one.
The strikes will see the Piccadilly and Circle lines closed entirely, as well as the Metropolitan line between Baker Street and Aldgate. Central line services will not run between White City and Liverpool Street. That's your travel update.
Great.
Keep an eye on.
It's remarkable how relaxed Guy is when he has to head back to the Shires. With no,
anyone would think he's not very exposed to tube travel.
I have been known to take the tube every once in a while, but it's a nice day out there.
It is. Watch out for UK home builders as well. Crest Nicholson cutting its guidance. I was trying to take us on to lighter territory, but that didn't work.
Yeah, I think it looks nice out there. That's lighter territory, isn't it? Anyway, the markets are about to open. We're about 5 minutes away. Looks like futures are pointing a little bit positive this morning. We are really into the thick of the earnings season over in the United States now, which I think is going to be a real kind of touch point for these markets. What are the big names going to be telling us about how they see their businesses developing from here? Q1 earnings, are they going to tell the story, or is it going to be the statements we get from the companies that are going to tell us the real story?
Big tech next week.
Big earnings coming through from the tech sector, and a gauge on what's happening, of course, in terms of that demand. The Asian session being really strong again. The Kospi at a record level. Taiwan stocks are performing very strongly as well, and across the benchmark over in Asia gains of 0.8%. So that's a decent handoff for Europe. The opening trade coming up. This is Bloomberg.
Tuesday morning, good morning. A couple of minutes to go until we start equity trading here in Europe, cash equity trading. Yesterday's session for Europe, we gap lower and we basically hold that loss throughout most of the session. Finished down, let's call it circa 1%. That is about here. The US afternoon basically delivers not much upside, so there's not much to price in, just a little bit, and that's what Tom's seeing maybe on his futures this morning.
Yep, European futures pointing higher by 0.3%, so some modest optimism on expectations that those talks will take place in Islamabad. We haven't had a confirmation yet, but it's pointing in that direction. FTSE 100 futures looking to add at just 11 points, pointing higher by 0.1%. Energy was supportive for the FTSE 100 relatively yesterday. Different dynamics at play today with oil prices and commodities, iron ore, copper and silver all a little weaker in the session. So watch the miners. DAX futures pointing higher by 0.7%, pointing higher by 73 points. Anna.
Let's also keep an eye on some of these individual names and sectors. So AB Foods could be in focus. We've had an update from that business. It's a diverse business, of course, covers retail, but also food, as the name suggests. Barclays saying that the stock could fall on weaker sugar and softer Primark. And Primark is where the market often focuses. And they've been quite cautious on their statement there with regards to the Middle East. Watch defence names as well. Thales, organic sales growth coming in ahead of estimates, but we've also seen downgrades from brokers to Safran and Leonardo, so that's going to be a sector to watch. And renewables in focus, watch SSE and watch Centrica. A higher taxation on some parts of their business could be part of a wider narrative of trying to get these power companies to embrace a newer pricing model that delinks power and gas prices in the UK. So that's also part of our focus. So we'll watch those, and we'll watch UK house builders as well, Guy.
Lots to watch. Let's take a look at the numbers. Let's give you an idea of how European equities are opening this morning. We're expecting a small jump at the get-go of trade this morning. Yesterday we were down, as I keep saying, around 1%. So you just factor that into your thinking when you see the numbers that are about to pop up on the screen in front of you. FTSE absolutely flat. Yesterday maybe one of the outperformers as we saw the oil trade doing better. Names like Shell and BP having a better session. So the FTSE's fairly flat at the moment. We're expecting the stock 600 to be up by 2.3% once we start getting a few more names giving us an indication. CAC 40, DAX, AEX, IBEX not giving us much at the moment. We'll wait and see exactly what they deliver. We've got the full suite. There you go. CAC 40 down a touch. DAX is up by 0.3, AEX up by 0.3, IBEX is up by 0.3%. To be honest, Not a lot to see here in terms of the overall headline index number. So, Tom, what have you got at a sector level?
Top of the sectors right now is tech, up 1%. That's a subject we've been working through this morning, of course, and we've been talking about the fact that the Asian session was very strong on the back of the AI trade, a lot more investment, some innovation, some companies listing. That's all providing that momentum. So tech is top of the list in terms of the sectors so far. Interestingly, followed by utilities, but just up by 0.4%. It's a 1% gain so far for the tech sector. On the downside, financials, the biggest loss coming through, but not by much, by 0.3%. You've got 7 sectors in negative territory so far. Telecoms, healthcare and financials all down between 2 and 0.3%. So it's pretty modest in terms of the losses coming through for those sectors.
Yeah, it's interesting that technology is doing quite so well here in Europe today. And as you mentioned earlier, Tom, the South Korean market obviously doing really well. And this is a continuation of the don't look here, look there story. Don't look at Iran, look at AI and what that's doing. And that does seem to be something the market is happy to run with. And we haven't mentioned much the Amazon Anthropic story from overnight, which did move the share price in after hours trade. As Amazon said it's going to invest an additional 5 billion, maybe 20 billion in Anthropic, and Anthropic is going to buy more stuff from Amazon. And whilst that might sound a little cyclical, it comes ahead of earnings where people are going to be looking for any demonstration of confidence from these businesses about the prospects for AI ahead. So maybe the market is taking this as an early sign of some of that confidence. Certainly tech is outperforming this morning.
There's a few ex-tiers in the market. UBS is one, Airbus is another, Volsi is another. So just kind of bear that in mind when you look at the kind of the right-hand side of the screens. It is interesting. In terms of, I'm just trying to kind of see, the SSE trade is interesting. So that's up this morning. And you've got Rolls is up as well this morning. Now, GE is going to report numbers a little bit later, so we'll see exactly how the read-across works from GE Aviation. I'm wondering whether today is a holding pattern for Europe, whether or not we've got the kind of the story coming up with what we're going to get out of Islamabad today, tomorrow. We've got a whole raft of US earnings that are going to be delivered over the next sort of 24 hours as well. And I'm looking at the screen in front of me and thinking, is there a tell here on what investors are thinking? And I'm not sure that necessarily there is.
Let's get another perspective then. Let's bring in Mandelson Fowler, Global Investment Strategist at JP Morgan Private Bank, with us on set this morning. Madison, nice to see you this morning. So help us understand the market's thinking then, with so much at stake, seemingly, with the Strait of Hormuz still closed. The market thinks it can look through that and focus on AI, which might be true, but if the Strait stays closed, there's surely a longer-term problem. So how do we put all of that together this morning?
Sure. So I think what the market is looking at is an environment where sentiment and uncertainty were, I think, certainly a really big component for the valuation contraction that we saw, I think, throughout the course of March and over the last few weeks. I think why markets perhaps feel a little bit off is that you, of course, throughout this conflict have actually seen earnings revisions move higher, not lower, which you would typically see in any given calendar year, but let alone during a conflict. I think that's what's perhaps causing this sense of some confusion or a sense of paralysis among investors. But I do think what's really important to stay rooted in is that while sentiment might still be a bit fragile, the fundamentals have very much remained intact. And so I do think what we're seeing right now is this refocus from investors on that corporate resiliency story as we're looking into this start and ramp up of Q1 earnings season.
And so are you able to focus, and do you find conversations with clients are able to focus on the earnings story, on the prospects for AI, rather than be distracted by what is going on in the Middle East?
I think, of course, all of these conversations are really difficult to navigate when you're feeling this really profound sense of uncertainty. And that's, I think, a very understandable place to be. And I think that's why, for instance, when we came into the year, we did have an outlook of both promise and pressure. We are constructive but not complacent to the risks. So it comes back down to, where you focus. And we want to be focused on those, earnings-led segments of the market, and specifically those companies that are more linked to strategic priorities. So technology is one of them, but you also want to be selective. We are seeing this, tech trade certainly fragment. We have a preference for hardware over software, and also looking at more of those strategic elements like security, utilities that are linked to AI, and you can also start to talk about financials, which really pulled back, but we have certainly seen a fair degree of resiliency in this earnings season.
Madison, when does a continuation of the uncertainty in the Middle East start to erode those fundamentals? You don't feel that it has yet, but there's a time frame when that starts to happen, when that starts to challenge the fundamentals that are supporting that corporate earnings picture?
Of course. And so one of the ways that we kind of, I think through what this could potentially mean is to view it from the lens of scenarios. So our base case scenario is rooted in more of a de-escalatory outcome, which could see still a geopolitical risk premium attached to markets, looking at Brent crude around 80 for the next few months. But I think if we were to see this not only persist for longer, but also see oil prices at an even more elevated level than that. So if we were to see, well north of 100 6 months from now, that would be more of a problematic scenario for markets. But if you're, around 100 for the next 3 months, we do think that that's an environment in which earnings, especially in the U.S., can actually manage through.
And you have a target in presumably on the first case, the first scenario of 7,500 for the S&P 500. Where are you finding the most margin resilience? You named a couple of sectors there.
Yes.
Just underscore for us where you're finding that in that scenario.
Yeah. So when it comes to margins, we do know that the S&P 500, by and large, has demonstrated really tremendous margin resiliency. We're looking at another expected quarter of net profit margins around 13%, which is roughly in line with the last quarter, and again historically high. In terms of the largest, I think, degree of margin resilience, again, that's within the technology sector. It's seeing some of the most meaningful increases, but we're also seeing it across a number of those sectors that I already mentioned, particularly financials would be one of them. We're looking at industrials again, and one of the areas where you're not seeing a lot of that margin resilience and where it is, I think, a little bit more at risk would be consumer staples, for instance.
You mentioned a while ago that the earnings estimates have gone higher.
Yes.
If I strip out energy, have earnings estimates gone higher?
Yes. Actually, what's really interesting is that energy has been a little bit more of a wild card when it comes to earnings expectations. So, coming into the quarter, energy was actually expected to, meaningfully move Q1 estimates higher. But in the last few days, given expectations around a number of big companies, those earnings revisions have actually, or earnings expectations for the quarter have actually moved lower. So I think we have to look at the full year because Q1's a little bit of a difficult environment. But still, even if you were to strip out energy for a full year, you are looking at meaningfully, I think, and respectable earnings recovery throughout the course of 2026.
Is now a good entry point after the recent rally?
It's about where you focus and how you focus. So I think for a long-term investor, we do think that, we are mindful that now is still a good time to invest from our perspective. We do still, even on our base case, throughout the course of 2026, see, high single-digit upside for equity markets. And again, when you come back down to those sectors, we would expect to see even more meaningful upside.
And what about the dollar? I mean, so important. It's been so important. It's to the reaction function that we've seen in markets to the war in the Middle East. A little more stable of late. This is going to be a big factor for global investors as to where they want to get exposure. So, are you expecting the volatility in the dollar to have subsided now, or are we in danger of revisiting some of that?
So I think so long as the conflict persists, we are likely to see volatility across asset classes. Volatility has been most pronounced within the oil rates and currency space, which is why there's a little bit more risk premium attached to those segments of the market relative to equities. When it does come to the dollar, we had already, coming into 2026, expected choppy bottoming out process, given some of those factors we called out, like narrowing and relative growth differentials and how much demand there are for U.S. assets. A lot of that, I think, had moderated coming into the year, and now as we look at this environment that we see, we could actually see some modest further upside for the dollar from here. But again, it could be choppy.
What does all of that mean then for Europe? You're sounding in your notes more cautious on Europe versus EM versus the US, and you've talked about the relative resilience there. But Europe is looking more vulnerable to you?
Yes, and I think that, even heading into this conflict, we had moved our view on European equities more towards, a neutral view. And that was given the fact that it had felt that valuations had caught up with the earnings recovery that was anticipated from Europe throughout the course of this year. So when we then, I think, link that with the energy dependence that the European economy has, it does look more vulnerable to us. So we're more focused on those elements within the European market that we think that can offer value for investors. And again, that comes back to that security theme, the hardware theme when it comes to semiconductors, for instance. And that's about, I think, focusing on those national champions rather than a case for the broad market.
Mandelson, great to see you. Thanks for stopping by to see us. Mandelson Feller, global investment strategist, joining us from JP Morgan Private Bank. Let's take a quick look at where we see markets moving this morning, some of the single stocks that we keep an eye on. And as you can see, a fairly mixed picture this morning. Defence stocks ticking up a little bit, but the story continues to be the standout performance we're getting out of technology. ASML up by 1.25%. You've got a little softness in LVMH, in Nestle. The pharma stocks have quietly been doing quite well over the last few days, but that unwinds this morning a tiny bit, with Novo Nordisk down a little bit. But let's go shopping at Primark. Chloe Melly is here with more.
Good morning, guys. We're seeing a lot of weakness in AB Foods this morning, down almost 6%. So there's a couple of things from AB Foods. It flagged a lot of weakness in its Primark and the sugar divisions, but it also announced that it will be going ahead with the demerger of Primark from its food operations. So it's unclear which one of these pieces of news the market is reacting to, but in any case, we are seeing a lot of weakness there. Moving on, but staying within the UK, we have got the UK renewables sector doing quite well. Both Centrica and SSE doing well, being in the green this morning, because the UK is planning to de-link gas and power prices, which would cut down the cost of green electricity. And so this is seen as positive for the sector, and therefore we are in the green there. Another UK sector that is not doing so well is the UK home building sector, and that is after Crest Nicholson. As we can see here, a massive drop for Crest Nicholson, cut its guidance because of economic uncertainty, and so that doesn't bode well for the rest of that sector. And so we are seeing this guidance cut from Crest Nicholson drag down Vistry and Barrett Redrow as well this morning. Moving on to Beiersdorf, which is the German skincare company, also weak this morning after its first quarter sales missed estimates. This is something to keep in mind as we head into the L'Oreal earnings as well later this week. And finally, this is the last one, I think. Thank you.
Chloe, thank you very much. Indeed, that was great. That's all we need. Chloe Melly with the stocks on the move so far in the Tuesday session. Chloe, thank you. Let's check in on what's happening in the semiconductor space. Guy mentioned that the outperformance is there again in the chip space and zeroed in on ASML. ASML is certainly performing today with the stock up currently a little over 1%. But you've also got ST Micro gaining 2.4%. So the outperformance is coming through for ST Micro. Infineon over in Germany is gaining 1.3%. Interestingly, on the software side, SAP, which has been beaten up year to date, down about 30% year to date, is gaining in today's session. So on the software side, you're seeing some upside as well, 1.2%. We'll see if that is sustained for SAP. It's been challenged as part of the SaaSpocalypse trade, of course. But again, the semiconductors, the hardware, the ST Micros, the ASMs, the ASMLs, the Nordic semiconductors, all performing and doing well in session.
We get numbers from ASM International, don't we, later
after
today?
Close, yeah.
So that'll add another dynamic to the tech story.
Chip sector has been traditionally very cyclical. Are we pricing a chip sector that is no longer cyclical? Is there an expectation that demand will continue to run away from supply for a while longer, and that's all the market needs?
The hyperscalers, they're not cyclical, are they, in terms of what they're building out?
It's very structural, maybe.
I don't know the answer to that question.
Cars are cyclical, right? And laptops are cyclical. In terms of the ups and downsides of the economy. But traditionally
you get you get a demand, then you get supply, then you get oversupply, then you
chips.
Sure, but are we pricing for the first time, I think, a non-cyclical chip sector? Are they going to be determined not to increase supply? And I've heard talk of this, that they're not going to increase supply. They want to maintain pricing power. So you don't get a pickup in supply that ultimately matches.
Well, if the AI build-out is such a revolution, like the railways, like other big...
Which were quite cyclical, let me just point that out.
Yeah, probably bad parallel. But then maybe this is some big structural build-out that is more structural than cyclical, and then that continues to apply upward pressure to those chip prices, perhaps. Or maybe the cycle just becomes really expensive versus slightly less expensive,
yes.
and that's where we fluctuate. We will no doubt continue to talk about this. Coming up on the programme, we'll get to the banking conversation as well. Commerzbank fires back at UniCredit after the Italian lender criticised the German bank's strategy. The gloves are off, it would seem. More on that conversation next. This is Bloomberg. On the opening trade, then, a focus on the banking sector right now. UniCredit and Commerzbank. UniCredit, of course, in pursuit of Commerzbank, and this is the share price movement we have for today. Both of them down, essentially. We want to linger on this story because Commerzbank CEO Bettina Orlopp has hit back at her UniCredit counterpart, Andrea Orcel, after he delivered a sharp critique of her strategy. The German lender says UniCredit's actions, quote, undermine the fundamental trust essential to the banking business and are not in the interests of shareholders. For more, we are joined by Tom Metcalf, Bloomberg Managing Editor for EMEA Finance. And UniCredit is, of course, a shareholder of Commerzbank. So we saw UniCredit out with some pretty strong words yesterday. Commerzbank fighting back overnight with some strong words of its own. It seems that the gloves are off. Can they come together? Can they find some common ground and do a deal here?
Yes, I mean, certainly they seem further apart than ever, right? But, of course, the longer this goes on, the sort of more the pressure builds, really on both sides, for some kind of compromise. So that will be the interesting thing is, you know, right now they're obviously defending their respective strategy, or Shell saying this is a great idea, and Commerzbank going, no, we are way, way better independently. So, yeah, the interesting thing from today's story is, you know, the in-person meetings, perhaps as you'd expect, very cordial, but sort of, though those meetings kind of seem to get progress, then immediately afterwards there would always be some kind of development like these today where, you know, one of the two sides would release a press release which basically annoyed the other. So there doesn't seem to be much sort of pragmatic forward motion, I suppose.
Yes.
But, you know, the reality is, as you say, UniCredit have a 30% or near 30% stake in Commerzbank, so something's got to shift at some point.
Okay, so the obvious next question is what happens next? And Andrea Orcel's about to walk into this building. Like, what does he do next? Like, how does he's got on the attack, how does he make this attack stick in a way that previous attacks have not?
Yeah, well, I think it's probably the same strategy he's been using, right? Persistence, sticking around, kind of, he's taken a lot of sort of PR abuse, I suppose, from Commerzbank and even Berlin. But I think what he's shown is if you can kind of ride that out, you get in a pretty strong position. So, look, 30%, my sense is that momentum is starting to shift towards UniCredit. For the longest time, I just thought, there's no way this can happen. Berlin are against it, Commerzbank are against it. But,
more of attrition. Basically.
Exactly. Just by being sort of persistent, he seems to be in a situation where, at least in the market, people are starting to think, hold on a minute, if he sticks this out, just by virtue of having a 30% stake, he will, you know, effectively have control.
So if the market momentum is shifting, maybe, towards UniCredit and Orcel, what about the momentum of the German government, which you mentioned is a part... We've been hearing from the Chancellor just in the last 24 hours or so, talking about this.
Yeah, and to me, that rhetoric seems to be only getting, like, stronger, right? Like, you know, this is unacceptable, we do not like the way sort of Orcel's gone about this. You know, those are just words, right? And I think at some point, you know, obviously Berlin could really block it if it really had to, but then the question is does it really have that sort of political appetite to really get into kind of what would be a painful fight, I think.
We will hear from Andrea Orcel a little bit later, I think, but you know, is it possible that some of the language that's used that's perhaps not making it any easier, maybe that's intentional, but he was saying yesterday that this is a story of operating underperformance, talking about Commerzbank. It risks becoming unfit for the market. These are quite bold statements, aren't they?
No, exactly. And I think that's the change recently. Is, you know, you could tell it was pretty contentious, and both sides were you know, definitely not happy with the other. But I think the wording is kind of really, you know, or the rhetoric at least has got to a whole new height, and it's really interesting because, you know, what about, let's say it does happen, you've then got, what does that mean for people in Commerzbank who, you know, clearly are not big fans of Orcel?
Okay, Tom, great stuff. Thanks for the update. Lots more to come on this story this morning. Managing Editor for EMEA Finance, Tom Metcalf, and Andrea Orcel will be here shortly. Alaska Air has suspended its full-year profit guidance due to rising fuel costs as a result of the war that we are seeing in the Middle East. This as airlines around the globe grapple with soaring jet fuel prices. Bloomberg aviation reporter Danny Lee joins us now. Danny, we're seeing pockets of distress. Clearly, weaker airlines are beginning to struggle a little bit. I'm not naming names here, but you're seeing it in various kind of geographies. Does this spread to a wider level of distress, and when does that start to happen?
Well, we're going to see some airline earnings come through, first of all, with Alaska Airlines. They had been previously guiding towards a full-year EPS of $3.50 to $6.50 a share. Now that's been suspended because of the high fuel prices. You know, when you even look at its first quarter numbers, it hit on the revenue and on the adjusted loss. But it's that second quarter where they're seeing a loss of as much as $1 a share. That's more than what the 11 cents a loss that the street are looking for. So clearly there is pain that they are still yet to feel, because that first quarter only reflects a month of the war so far, and it's the cost of the fuel. Now, Alaska Air is going to be paying $4.50 a gallon. That's around a $600 million increase in its fuel bill than it's expecting. And with it not hedged, you see just how that could impact other larger airlines in the months to come, because this fuel price more than doubled, has been elevated. And we are going to see United Airlines actually releasing its earnings later on today. So it'll be interesting to see just what it says, because it had been warning potentially of an $11 billion increase to its own fuel bill. But I'm sure with the war impact and also the consolidation impact that Scott Kirby, the CEO, has been stirring with his alma mater, American Airlines, I'm sure the street and analysts will be looking both at those kind of topics.
Yeah. And Danny, when we hear from airline execs, is it the case that they're still very concerned about prices, obviously, but not really about jet fuel availability? Or are they increasingly worried about jet fuel availability, and maybe this is a regional story?
Well, I think for the US, there is less concern about supply and just more about pricing, given the fact that the US airline industry is unhedged from the cost of fuel, so they're eating up the cost in full. And when you look at some airlines which are in real distress right now, the likes of Spirit Airlines, they have said, Bloomberg has reported that the airline has been approaching the government to see what it can do for them to help them out, potentially take a stake, some kind of bailout. It remains to be seen whether this would be the right approach, because this could set a bad precedent for the industry and how rivals would see that, and particularly for Spirit Airlines, which has been in distress for a number of years now. And of course, it had its failed merger attempt with JetBlue not that long ago.
Danny, thank you very much. Danny Lee joining us there on the aviation beat, a little bit on the global aviation story, a bit on the US aviation story. Should we talk about the house builders in the UK? Because there's a lot of headlines crossing, well, there have been headlines earlier around Crest Nicholson. And once again, we're sitting here with some guidance that's coming weaker and an incredible share price move.
The stock is down. Well, it's just been suspended. I think it's jumped from on my screen from being down 42% to being suspended as a result of breach of tolerance level, which basically means it's been halted because the drop is so big. It's nearly lost 40% of its share price this morning. The UK housing market's in a really difficult place right now. House builders are in a really difficult place right now. It is a struggle on many levels, and you just start at the kind of the top of the level. Getting visibility on what is happening with mortgage rates right now is just incredibly difficult.
We're not understanding where the BOE goes next, whether they stay on hold, whether they indeed hike. Market expectations around that feeding into the house builders, and this is Crest Nicholson then cutting its guidance, and the market impact is there.
We'll move back to geopolitics in a moment. President Trump raises the stakes ahead of potential negotiations in Pakistan this week. We will speak to Rob McCare, former UK ambassador to Iran. That's next. This is Bloomberg.
This is the opening trade. We are 30 minutes into the Tuesday session. You look at the benchmark Stock 600 and there seems to be a lack of conviction, or at least waiting for more answers. The focus is partly on AI. The focus is also, of course, on what happens in terms of the talks in Islamabad, if indeed they come to pass. Currently, then, the markets are up just 0.1% on the benchmark. It's a stronger session. If you look under the hood at the DAX, up 0.6%. The auto sector is helping with that lift. The FTSE 100, meanwhile, is up just 0.1%. The home builders are under a bit of pressure here in the UK. The CAC count over in France, largely unchanged. Guy, what are you seeing?
I'm seeing a market that is, in terms of the number of stocks higher, definitely kind of giving us a positive story. 412 up, 170 down, 2 to 1. Let's call it that. I'm obviously averaging. Talking of averages, this is the volume versus the 20-day average. Volume hasn't been great for a while. And obviously that number has been declining. But today it looks particularly weak. There's a lack. We're kind of waiting, I think, for the next catalyst, the next obvious catalyst to come through. So the market kind of feels like it's kind of waiting and watching and not doing very much, which kind of, I think you need to see the next moves in the context of this. What you're getting this morning is a bid back into some of the tech stocks. ASML is doing relatively well. The software story is looking okay. SAP is bouncing a little bit after being so badly beaten up. ASML is up by 0.8%. SAP is up by 1.3%. You're seeing changes in the regulatory structure around the UK energy market. That appears to be benefiting Scottish and Southern this morning, which is up by 3.7%. Let's call it 4%. So that's the story. So tech's doing okay. Tech's kind of keeping us in there. Downside, I think Astra's got some phase 3 trials which maybe are weighing a little bit. It's down by 0.9%. Roche, though, is down by 0.9%. Safran in the aerospace arena, it does lots of different things. It makes the nacelles, it makes all kinds of stuff for civil, and it obviously has work elsewhere. The defence names are going to be in focus today. Keep an eye on Thales, but you've also got names like RTX, which are going to be producing numbers a little bit later. I think Northrop's out with numbers a little bit later over in the United States. So a market, I think, that is lacking a sense of direction, I think, this morning, or just doesn't have one. Anyway, it's a Tuesday morning. Who needs a sense of direction? Anna, what else do we need to know?
Let's get up to date on some of the other corporate news flow and other news flow we're covering here this morning at Bloomberg. After 15 years at the helm, Tim Cook is stepping down as Apple's CEO, handing the reins to John Ternus, the current head of hardware engineering. Ternus will become CEO on September 1st, and Cook will transition to the role of executive chairman. The future of Keir Starmer as UK Prime Minister appears to rest with a bureaucrat he fired over the vetting of former UK Ambassador Peter Mandelson. Olly Robbins is due to appear before Parliament today and is expected to say he felt pressure to approve Mandelson, despite opposition from vetting officials. President Trump has told Bloomberg he's unlikely to extend a 2-week ceasefire with Iran, which he says is due to expire on Wednesday evening, Washington time. Meanwhile, Iran has yet to confirm it will participate in talks to end a war which has engulfed the Middle East and upended global trade. Guy.
Let's find out more about this. How much do we actually know about these talks? Let's go to Dubai. Jumana is there for us with the latest. Jumana, we think talks are happening. Do we know talks are happening? Do we know what's happening around these talks? Who's going? And what does it all mean for the ceasefire potentially?
Well, I was just reading about Islamabad itself being prepared, fully prepared for these talks to take place. Parts of the city are in lockdown. There are thousands of security personnel being mobilized in anticipation of the talks. And yet, we have yet to see the delegations arrive. And we know from the U.S. standpoint that J.D. Vance is going to be leading up the U.S. delegation once again alongside, it is expected, Jared Kushner and Steve Witkoff. But they have not yet departed the U.S., which means if the talks do happen, they will likely take place tomorrow, which also coincides with the timeline that President Trump laid out yesterday. He spoke to one of our Bloomberg colleagues overnight, and he said that the ceasefire expiry has now moved to Wednesday evening Eastern time, which is Thursday over here in the region. But that also he has no inclination to extend the ceasefire, which sort of suggests that he thinks he can wrap things up in the next 24 hours. But we have not yet heard from the Iranian side. There hasn't been an official confirmation of who is attending from Iran. And indeed, a lot of, once more, belligerent messages coming through overnight. We heard from the Speaker of the Parliament, Mohammad Ghalibaf, who was the lead negotiator in the last round of talks. And he was saying that they will not negotiate under threat. Similar messaging coming through from Iran's ambassador to Pakistan, saying that they will not tolerate the ongoing naval blockade that the U.S. is imposing. And so we're in a situation now where it appears to be the case that the Iranian stance is, so long as the U.S. continues implementing their naval blockade on the Strait of Hormuz, that could impede the possibility of actually proceeding proceeding on to the next round of those discussions. So I guess a couple of things to watch out for as we think about, how the day is going to evolve. Number one, does the president change his mind? Does he temporarily lift the U.S. blockade in the interest of pushing forward those discussions? And number two, when does J.D. Vance actually leave the U.S.? Because that is going to be a signal that the talks are actually on in the next 24 hours.
OK, Bloomberg's Jemana Bezechi on the ground for us in Dubai with that update. Jemana, thank you. For more analysis, let's bring in Rob McCare, former UK ambassador to Iran from 2018 to 2021 and Chatham House Council member. Rob, thank you for taking the time to join us in the studio. With your deep understanding of Iran and how the government there operates, what is your assumption right now as to whether or not there is willingness from the Iranian side to strike a deal? It seems Trump wants to get a deal. Do you think the Iranians are close to giving up some of their red lines to get something across the line in the next couple of days?
I think it's likely that they go to talks in the end. I mean, it's not guaranteed. There's lots of potential for miscalculation, but it doesn't seem to be in Iran's interest to push President Trump into a corner where he has to make good on his threats to launch massive attacks on their civilian infrastructure. So it's likely that after brinksmanship, they will go to talks. But, they're very, very crafty and experienced negotiators. And what they consistently do, and what you're seeing right now, is the ability to reframe the negotiation, where President Trump wants a very simple discussion, massive military threat versus, complete nuclear capitulation, all the material comes out, no enrichment, and so on. Better deal than President Obama got. But that simple equation, has now been muddied by who goes to talks, who wants the talks more, and then, of course, freedom of navigation in the Straits of Hormuz. So it makes it harder to achieve what the US want.
And it's the Straits of Hormuz that comes up consistently with our guests when the focus is on what investors are looking at. And are the Iranians prepared? It's a point of leverage that many people didn't think they would use. They've used it. Are they prepared to give that up? Will they give that up? That is what is so essential for the global economy.
I can't see how they are going to end up with their maximalist position, which is to extend what they would call sovereignty, to extend Iranian control fully over the Straits of Hormuz, which they've never really had in the past, or they might have made noises about it, and never seriously claimed to do that. But I think they are going to be very reluctant in this situation to give up their ability to use it as a threat unless they get what they want in these talks, which is some sort of a guarantee that they're not going to be subject to another attack imminently, and some sort of economic relief.
So if they don't want to give up the control of the Strait of Hormuz, and that's something that they've said, and they want to maintain the ability to at least go back to enrichment, they were proposing, I think, last time, 5 years. So that they could still be the sticking points we're talking about here. But if we end up going back to war, Rob, I mean, what is the Iranian regime as it exists now? What is its tolerance for war? How long could they tolerate that?
I don't think any of us know the answer to that, and I think that's a key question. I do think that the risk in all this is the risk of the two sides not understanding each other. So Iran not understanding the US because of the contradictory messages coming out of the White House, which obviously is partly deliberate. And on the other side, the US consistently underestimating the ability that Iran has to absorb the pain that the US delivers to them. I don't think anyone knows how long that can go on or how resilient they are, but this is about the existence and the survival of the regime. Their backs are against the wall, and for them, capitulating to the US would be the end of the regime. So there is this misunderstanding about what this conflict looks like and how it's resolved, and that's the most worrying thing.
So in that context, is it possible, can you foresee an agreement that means that Iran steps away from enrichment for, 10 years, but that kind of number gets agreed to? Because I think the Americans went in asking for 20 and the Iranians said, OK, 5. I mean, do we meet in the middle somewhere?
Yeah, it's perfectly possible to find a face-saving compromise on the nuclear program. I mean, Iran would be willing to compromise. It's not enriching anything at the moment. Doesn't really, obviously has these stocks of highly enriched uranium. It's unlikely to be able to do anything with them for the moment. So there was clearly a compromise available that where Iran can say it's preserved its right to enrich, but isn't actually enriching. And as I say, there's a lot of negotiation around timescales and timelines for that. But I think it's key for President Trump, as you can see from his comments, is that it has to be better than the JCPOA, the deal that President Obama got, and that seems to be his priority.
There's a number of points. Let's pull them out a little bit that you made. If we do go back to kinetic action, how would the Iranians react? There's talk that they would target Gulf energy infrastructure again. How big an escalation would that be? And what would be the effect of that?
Well, of course, they've got an incredibly weak hand, haven't they? So,
Yeah.
I mean, the US has total military dominance. They can attack anything at will. Iran clearly has some capacity to continue firing ballistic missiles and drones. What they will try to do is to calibrate the response so that
Right.
if they get massive attacks on power stations and bridges, as has been threatened, then their response will be proportionately higher against those sorts of targets in the Gulf.
At the other end, is Iran prepared to, assuming you don't get a deal, but we get kind of ongoing talks, how long can Iran sustain where we are now in terms of the kind of the restrictions that the US is placing on its shipping? How long could this kind of scenario that we're currently in last for from an Iranian point of view? It has land borders, it has all kinds of other things, but it needs to get its oil out, I'm assuming.
I think that is the question that everyone wants to know the answer to. They are in a very... they're hunkered down. They are obviously controlling the situation on the streets absolutely tightly to prevent popular uprising. The economy was already in a disastrous state before the war. It's now be significantly worse, and with the blockade facing real challenges. But how long they can hold out, I think, is the key question. And consistently... they've shown the determination to outlast
Are they waiting?
the US.
Are they waiting for shortages to show up around the world? Is there a point at which their leverage becomes really becomes better, and the card they have to play is better because actually you're seeing shortages in Europe and Asia, etc.? Is that the point at which that the current scenario points them towards?
I think it's their only choice, other than capitulation to US demands, isn't it? I mean, they are working out that the longer this goes on, the worse it is for the world economy, and the more difficult it is, therefore, for the US. Iran's in a much worse position, but they're hoping that pressure leads the US to compromise.
Israel were not involved in the last talks, and I don't think that they are attending these talks if they happen, and clearly that widens the conversation about the region and some of the proxies that Iran supports. Do you think that they would be prepared to give any ground in terms of supporting those proxies if it were to deliver a better result for Iran with the United States?
I think in the long run they'd be open to talking about it. What they've consistently said is these are organisations that have their own volition. They're not controlled by Iran. They might make some. In a far-reaching agreement, they might make some commitments about not supplying military goods to the Houthis or Hezbollah, but disbanding or effectively disarming those organisations is not in Iran's gift, and they would say that's not something we can do.
Rob, thank you very much. Thanks for joining us. Rob McCare, former UK ambassador to Iran and Chatham House Council member. Coming up on the programme, President Trump's pick to be the next Fed chair will testify later today before the Senate Banking Committee. We will have more next on what to expect. This is Bloomberg.
47 minutes past the hour. Welcome back. You're watching the opening trade. The DAX is the only one that really stands out in terms of some action today here in Europe. You're seeing names like SAP having a fairly good session, which is lifting that market, outperforming the rest of Europe, which is kind of sitting on its hands, trying to figure out what happens next. And at the moment, we don't know, but we're going to get a lot of answers over the next 24 hours, potentially.
Talking of what happens next, let's look ahead at what else we are focusing in on throughout this Tuesday, 9 a.m. UK time. Olly Robbins will be giving his testimony, of course, the former most senior civil servant at the top of the Foreign Office, embroiled in a dispute with the Prime Minister. So we'll listen into that, potentially significant ramifications for Keir Starmer. We'll be across that for you, starting at 9 a.m. UK time. 10 a.m. UK, we're going to be getting the German ZEW survey, 1:30 p.m. UK time, US retail sales, and at 3 p.m. UK time, another significant one for your calendar for today. Kevin Warsh, Fed Chair. Hearing, of course, will be in focus, and we'll also bring that live to you. And at 5 p.m. UK time on the earnings front, ASM International earnings on a day when we're seeing some upside for the tech space.
Let's kick off in our look ahead to the rest of the day with the UK angles first. A big day for British politics, another one. Keir Starmer facing another gruelling day, perhaps, as a little-known official, although if you followed Brexit, you'd have heard of him. He fired, Keir Starmer fired. He is due to speak at the top of the hour in Parliament about the UK Prime Minister's controversial decision to appoint Peter Mandelson as US ambassador. Let's bring in Bloomberg Markets Today editor Sam Unstead with us. Let's start. There's so many UK themes to dig into today, Sam, but let's start with that. What will markets be watching for in Olly Robbins? Because there's a lot of kind of court drama, but what are markets going to be focused on?
Yeah, so I think what you're going to need to see to have a really substantive effect on the gilt market in particular, global bonds, but in the gilt market in particular, all being driven by the war in Iran, energy shock. That is the dominant narrative. To change that, you'll have to see Olly Robbins say something that has a very clear cut-through that indicates that Keir Starmer's position is in genuine danger, and enough to convince investors of that too, because that narrative over the top of everything, in terms of the war in the Middle East, is enormous. It's covering almost every part of the market. So it will take a very significant but very clear cut-through to really have an impact on gilt markets.
Before the war started, the data, which we've now started to get, pointed to an economy that was looking okay. The GDP data looked good. Now we get employment data that looks pretty good as well. Yeah. I mean, so the employment data today, even before it arrives, most of certainly the wage data, which is the bit the Bank of England will look at most closely, only goes up to February. So, like all data that only goes up to February, it's pretty much been blown out of the water by everything that's happened since. The data itself, again, is pretty messy as well. There was quite a significant drop in the unemployment rate. That's kind of a technical change. It doesn't really tell you an enormous amount. So I think all the jobs data really does today is moves focus to inflation tomorrow, because that is the report that is going to have the most impact for the Bank of England and probably for UK markets as well.
How much of this windfall tax that was announced today on some of the utilities, some of the energy providers, how much of that is about addressing longer-term higher energy costs for consumers and businesses in the UK? What are the details of that?
I mean, most of it. So I mean, what you're effectively seeing is this delinking of gas and electricity prices, because if gas is the last pricing mechanism that's used, it means energy prices end up being higher. Had a little bit of this over the course of the last couple of weeks. It impacted the companies because any kind of intervention in the market without clarity kind of impacts those shares. You're seeing a lot of those companies move up a little bit today because what they're doing looks broadly pretty sensible, but it's not just for the longer term, but this is something that's been in the works for a very long time as well, as renewable energy generation in the UK has increased. And effectively, if you delink those two things, it should give the UK a much better control over their energy prices, and so energy shocks, like you see with the war in Iran, won't have as much of an impact as they do at the moment.
Let's complete our tour of UK news flow with a trip to the UK High Street and AB Foods. Numbers out today. There's the Primark story that always dominates. What did you take away?
Yeah. Well, I mean, probably as long as I've been a reporter, people have been talking about Primark being spun off from AB Foods. I think, so that in and of itself will probably be received relatively well. It's kind of expected. It allows investors to be able to value the two bits of the business, because the rest of it is sugar, grocery, so the two things have never quite sat particularly well together. However, underneath that, Primark sales not particularly good, softening a little bit. And we've seen actually over the course of the last couple of weeks, little hints that over the course of March and April, there's been a little bit of a pullback from consumers. So adds to that picture. It's still only bubbling under the surface at the moment, but not enormously positive on the underlying picture.
Sam, excellent stuff. Thank you very much indeed. Bloomberg Markets Today editor Sam Unstead. If you have a terminal, you can watch the testimony from Olly Robbins, as Sam was discussing the potential implications there, using the function LIVE Go on the terminal, likely to start around 9 a.m. UK time.
The other big event, which we'll be taking live a little bit later on today, will be the confirmation hearing for Fed Chair pick Kevin Warsh. Joining us now to discuss this and all the other things we're going to be talking about today, Skylar Montgomery Koenig. How much are we paying attention to Warsh? Is he going to be market moving today? Or with Tom Tillis blocking votes, do I just park it and think about something else?
I mean, we've seen historically that his commentary has had an impact on the market. And I think particularly now, if it confirms market biases, then it can be market moving. In terms of, if you get some dovish commentary, equities can be joyed by that with the backup story of tech doing well. Maybe the dollar can be under some more pressure, but it's unlikely to be a big shift in the bond market as a result, is what I'd say.
I mean, we've had a bit of an early look at what he's going to say, and a lot of it sounds like a kind of, this is before he gets questions, and then who knows, but a lot of it sounds in a kind of stay in your lane. You know, the Fed works best, the FOMC works best when it sticks to monetary policy, doesn't try to do social policy or fiscal policy. Those might be fairly uncontroversial from the Republican side, at least in the Senate.
Yeah, I mean, I think part of it is there's not a reason to change his tone very much, right? Like, part of the reason he got appointed was because he has a more dovish tone. Right now, it's very hard to be dovish because the starting point for inflation before the Iran war was something like 3% on core PCE. We know that there's going to be a big inflationary impact from the war, and so there's not anyone on the FOMC, I think, maybe other than Moran, that's saying we should cut next time or we should cut immediately. So it's hard to push against that economic backdrop, which is why I think the bond market's not going to change that much, right? You have a higher term premium needed, you have that expectation that rates are going to stay that way, and you're actually pretty dovishly priced anyway with that regards, with cuts still in the outlook. And I think further out too, even if you do get cuts eventually, the risk is if inflation is higher, those cuts feed into inflation persistence. So, you know, the risk is very much higher yields from here, and I don't think there's a reason that he would kind of diverge anywhere from that, and maybe the risk for him more would be commentary on the balance sheet for the market.
So from Kevin Warsh to Olly Robbins and the focus on the UK, we discussed some of that with Sam Unstead. How sensitive are the gilt markets to political risk and today's events, ultimately?
Yeah, I think there's more of a sensitivity to what happens in the U.S. because there's more of a feed-through to policy from that. We've seen that there's been a lot of kind of political issues in the U.K. in the past year. At the beginning of 2025, it did have a feed-through to the gilt market, but Starmer's gotten through a lot of these issues without losing his job. And so that means that there's a lower bar, or a higher bar rather, for the market to react to those issues. The worry is that if you have a different leader for the UK, it'll be more fiscal easing. Post Liz Truss crisis, there's a very low bar from the market to withstand deficit deterioration. And so it would certainly be negative for gilts, but I'm not sure today is really the day that impulse is from the UK.
Skylar, thank you very much. Skylar Montgomery-Koning of the Bloomberg Markets Live team. And I should just say we're getting a line from Iran saying it has not yet sent a delegation to Pakistan. This is to Islamabad for the talks with the United States. Yesterday we were here looking for clues as to whether Iran would be going, and we had seen some reporting suggesting that they would be, but now we hear this. Of course, the timescale has shifted a little. These talks, I think, not expected to take place until either late Tuesday or into Wednesday, was the latest guidance from the president in the US.
Yeah. And Jemana's been reminding us that the US delegation hasn't left either. So we continue
Does one need to go before the other one goes? And which one goes first?
I guess the one that's furthest away.
Well, that would seem like a logical thing, but maybe not.
Yeah, maybe not.
Before that happens, we are going to hear from a key player within the European banking space, because Andrea Orcel will be joining the Pulse with Francine Lacroix at 9 a.m. UK time. A really central conversation to tune in for then. Don't go away. The opening trade is next. That's it for the opening trade. The Pulse is next with Andrea Orcel. This is Bloomberg.